Very good morning, good afternoon, and good evening to all. This is the end of the week session, and we will see what has transpired in the week and what are the implications moving forward. We saw that the gold started the week with a knee-jerk move toward the lows of US dollar 1,670 per ounce, which eventually turned out the lowest price point for the week as gold recouped most of its losses incurred in the first hour of the trading. Now it is well on track with the gains, though not much compared to the opening price. However, if we count the gains from the lowest point, it is almost 5 percentage point up. That's a lot of move in a single week. Not to forget that gold has moved on both the sides in this uncharacteristically turbulent week. Initial losses were driven by bearish sentiments prevalent post the non-farm payroll data, while gains in the second half of the week have come as the market participants are unwinding their positioning in favor of the US dollar since the release of US CPI on Wednesday, which was not exactly weaker, but still it is the beauty of the market where not everything can be explained in a easy, straightforward manner. On the data front, we had final inflation rate release for the France and Spain. CPI for France is at 1.2% in terms of year on year for the month of July. It is one of the lowest in developed countries if we compare this CPI to the CPI for other major European economies. You will see the difference. For the North American trading session, we had the export and import prices release. There is growth in terms of year on year as well as month on terms for the last month. The US Michigan consumer sentiments preliminary estimates were also released for the month of August. It is lower at 70.2 compared to 81.2 in the prior month. This change in sentiment in such a dramatic way might be because people's expectations of the end of pandemic is not likely to materialize in light of widespread prevalence of newer variants which can lower the efficacy of existing vaccines. Consumers are turning cautious again, pushing the consumer sentiment index to the lowest level since December 2011. Expectations for the inflation have not changed much. 5 year inflation expectations stand at 3% for the month of August compared to the 2.8% in the prior month of July. Now let's shift focus to the technical side. We will consider the technical formation, the outlook for the gold, and after that we will also see what's happening in the USD JPY. Both these financial instruments are seeing sharp moves in today's session. The USD JPY has moved almost more than 50 pips, so we will see how these moves are likely to shape up its trajectory for coming days. Let's start the day with the gold's technical outlook. This is the daily time frame chart, and if we look closely at this reversal after touching the lows of around 1670 per ounce, we can notice that this sharp downturn and equally sharp upward momentum has been found, or you can say that it has found support of this prior swing low, and this is almost identical, not exactly identical, but this turnaround level is almost identical to this prior support zone, the prior swing low zone, and that gives me the confidence to think that after due consolidation, the gold is likely to trade with upward bias than trying to go below these prior swing lows. I'm not really expecting any big move again on the lower side. Rather than that, for most part of next week, we are likely to see muted price action in gold with bias, at least in the first half of week remaining on the bullish side, and we can expect attempt towards getting close to the levels of US dollar 1800 and US 1800 per ounce levels. So for that, it will be better for us to keep looking for the buying opportunities, which we have been doing for last 2 3 trading sessions. And we do have to be mindful that this is coming on back of this sharp downward turn. And as the gold has now again gotten closer to the initial levels, we might not really see big moves. Rather than that, the gains are likely to be muted and incremental as we move forward. If we consider the regression curve and the pivot point series, both are still bearish. We have this regression curve sharply inclined on the lower side, and that was mainly driven by these sharp moves. And now that the price action has gained some bullish momentum and it has even crossed above the upper band of the regression curve, we can expect some flattening in coming days. And if the price action holds well above the the upper band of this regression curve, we can expect the regression curve to not take much time, and maybe in next day or two we will see a lot more flattening, and that is likely to provide us the all the market participants more confidence to remain on the bullish side. If you consider the pivot point series, this third support of this month's pivot point series was touched, and from there on the reversal started, and now here we are trading the gold closer to this first support, and I am expecting the gold to consolidate closer to this area. We are not really likely to see a one-way upward move beyond this central pivot point. The central pivot point is going to be a major hurdle on the higher side, and keeping that in mind, we will have to trade cautiously, and mostly we will have to take scalping kind of trades where the focus will be on capitalizing the small moves. If we consider the hourly formation here also, the bearishness is quite evident. We have the price action closer to this 200 SMA now, which is likely to act as a near-term resistance, and we can expect the gold's current upward momentum to stall closer to this resistance area, and some sort of correction can't be ruled out, particularly in Monday's session. But on the lower side, we do have this base formation around the levels of US dollar 1750. We can expect these levels to hold well moving forward also, and as long as gold is holding well above the price levels of 1750, we can be fairly confident in our assessment of the bullish tendency in near term for the gold, and we can keep looking for scalping trading opportunities while keeping the stop loss little below these 100 SMA on the lower side while targeting the move towards 200 SMA. And if we consider the current price, it is already there. But for next trade, we will have to wait for some correction from the current levels, and only after that we will be in position to optimize the trade entry and exit. Now moving to the currency front, we will consider the outlook for USD JPY. This is the daily time frame chart. In yesterday's session, I had talked about the possibility of USD JPY continuing to move lower, but even I was not really sure that magnitude is going to be such. In yesterday's session, I was only cautioning against buying the USD JPY before it gets closer and stabilizes around 110. But in today's session, it didn't really stabilize, and it break it broke through, and now here we are seeing the USD JPY trading well below 110 level, and I think this is likely to cast an impact on its prior trajectory. Now in coming days we will do well to change our assessment and start looking for shorting opportunities, as we have this turnaround of sort for the USD JPY after getting closer to this prior swing high. This time around, the move has been quite sharp, but we will, of course, get the opportunities in coming days if we are vigilant enough. For that, we can take the help of this central pivot point, and the short sell trade should be taken only as long as the USD JPY holds below this central pivot point. So the central pivot point is going to be an important marker, and if we have the USD JPY crossing and holding well above the central pivot point, then of course we will have to change our assessment and we will do well to sit on the sidelines rather than keep shorting if the USD JPY starts to rise again. But in near term, looking at its magnitude of decline in today's session, I am expecting the USD JPY to trade in a bearish fashion for next couple of sessions, and we can even start looking for short selling opportunities. The regression curve remains inclined on the higher side, but the price action has now crossed below this lower band of the regression curve, and that is something which we will have to keep in mind. We have the support level of around 110 which now stands broken, and as you can observe, we had these consolidation lows which gave way in the early hours of European trading session, and after that it has been a sort of bloodbath for the USD bulls, and now here we are below the immediate support area. Moving forward, we can expect this prior consolidation phase lows to act as a strong resistance. Even the 200 SMA is likely to act as the near-term resistance, and I think we can keep looking or start looking for shorting opportunities if we see the USD JPY holding well below this 200 SMA and consolidating below it. So for any trading opportunities, the consolidation phase in the early hours of Monday session will be quite important. And by the time the trading begins in North America, we will have a lot more clarity, and accordingly, we can take the trades and keep our stop losses above this confluence zone of 50 and 100 SMA. These are not really close at the moment, and we will have to wait for these SMAs to catch up with the price, which has moved fairly sharply on the lower side. So that's my take looking at the current price formation of the USD JPY. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading with the financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, you can follow the Decoscopy Analytics page, for which the links have been provided. The JForex platform links and the Facebook page link has also been provided. You can check it out and start using. Thank you all for joining in. Have a fabulous day and the weekend. See you on Monday. Till then, goodbye.